Hi everyone, this is Michael Ben-Ghiat from Lifetime Investor, and this is the Stock Picks weekend review video for October 8th, 2022. So here's our disclaimer. You can pause the video and check it out. So this week we're going to go over the current market environment, and then we're going to go over the stocks on our watch and ready lists. We do have one stock on our ready list now. That's a big change from past weeks where we've just had nothing. But the market environment is still not great. And we don't have any stocks in our portfolio at this point. So let's go ahead and get started. So the stock environment indicator is still red. We have no exposure to the market. It's just not the time to be investing. We just can't get any traction in stocks. We have a handful of stocks that are acting well, but out of 8,500 or so stocks in the market, you can't just have a dozen that seem to be making highs and breaking out and holding those breakouts. There's just no merchandise. It's like going to a store and there's nothing on the shelves to buy. So, in the few things that there are, you'd be like, well, I don't really want that. So that's where we are. We had a couple ugly days again in the market after two really strong days earlier. We're in a bear market, and unfortunately, we just need to stay in cash and wait for that time, which will come when we're going to have a really fantastic, easy money buying opportunity where we can really make a lot of money in a short amount of time, but we're just not there. So all we do now, we just continually watch. That's why we're always looking for the best stocks. We put them on our watch lists. If they end up going onto the ready list, we're just not buying them, but we're watching what they're doing. And if they go into the ready list and then they come off of it, that's one thing. If they fall back into the watch list, that just shows that the breakout didn't really work. If they break out and go up, which a few of them have, and we have them on the list, as you'll see, that we're just watching what they're doing, even though we don't own them. So we're always trying to take the pulse of the market. What is really going on? Are leading stocks leading and breaking out and taking off, showing that they're leaders? Or are they all just breaking out just for a few days and then that's it, which has been the case for almost a year and a half now. It's really been a poor market environment. But, we did come off of just, 2000 when we had this absolutely crazy period with, bubbles everywhere. So, but that's the market, There's going to be times when it's easy and times when it's not. And, by having the patience and having your cash, safe in the account and not being chewed up like most people are just getting killed these days. They keep buying stocks. They're bottom fishing. Everything looks like a bottom. They get FOMO. As soon as we have these big up days, people think, oh, that's it. I'm going to miss out. And they get back in and just give some more losses down the road. So we don't do that. We are always very disciplined. And we're in this to make money, not to have trading excitement and all that. Let other people get excited by that. And they won't be very excited to see unfortunately, when their account balances goes down and down and down. But some people, they trade for excitement. They really don't care about making money. That's what they're doing. But we're not in that camp. If you are, you need to break yourself of that because, go mountain climbing or do something else. Go skiing. Get your excitement fill other ways, not trading in the stock market. Okay, so let's go ahead and take a look at the stocks. So we're going to start with the only stock on our ready list, which is Amylyx Pharmaceuticals. Ticker is AMLX. Okay, so this one, we have a buy zone 32 to 33. Let's see if I can show you here. Yeah, it was basically breaking above this little resistance area here. We had moved it up from over here at one point. You can see it kind of broke out and then it's just kind of come back again. But, we're getting high volume too. Not a great sign. But the good thing, though, is that the stock is actually holding up very, very well. I mean, it's a recent IPO. It's basically up near its old high, as you can see right here. Let's see if I can draw. So I'll draw a line here. And you can notice what it's done. This is very common. This is the old high from March, 33, I'll call it 33 and a half. And it came basically up to that point. And in fact, on Friday, we got a little bit higher, 33.87, and it couldn't hold it. So it came down a little bit. So, but you can see it's forming this nice cup. We had a little shakeout here. I don't remember what happened. I think we were in the stock or it was on our list, and it just plunged and it just came straight back. Must have been some news that the market didn't like, and then came back. But the nice thing though, so it shook out all these weak players and came back up, and now it's holding up here near its highs. That's exactly what we want to see. And at one point, the volume came way down, which is showing here that there's just not a lot of selling. And the less volume, while the stock stays up here, it shows that there's just not a lot of sellers up here. And then it managed to break out, and now it's up near its old highs. And ideally, the stock will just tighten up and stay right around here, even maybe another shakeout. During the day, it comes down to 29 or something and comes right back up, shake out a few more weekends, and then we just kind of tighten up around here, and then we break out eventually. That would be an ideal situation for the stock, but it's showing a lot of power here. You can see here's the S&P coming down. This is just going the opposite direction. Our RS relative strength line is at 99. Nice angle coming up. It's really just showing. And then the downside, it's a biotech and it doesn't have any earnings or sales. So you can see here, had, I don't know, 0.1. Yeah, there's almost no sales. So very speculative. But on the good side, though, the biotech group is now a group 5 out of 197. So we have quite a few of these that have been showing up on our lists over the last couple months. So this is definitely a leader. We just don't want to buy it. Even if it breaks out, it's just not the time. We're just not getting anywhere with most of the stocks. Okay, so let's go to our watch list. We don't have a ton of stocks here, but we do have a few that are acting very, very well, and we are just watching them. So this first one is Digi International. We did have a buy earlier, and it broke out, it acted very nice. And we just, again, we're not buying it, we're watching it, but you can see it keeps having some nice closes here. Closed in the high, this one closed in the upper range. Here we shook out and we came back and closed in the upper part of the day's range. And you can see just very strong relative strength line. This stock is making new highs. Let's go to the weekly. Yeah, weekly looks pretty good. And then the monthly, yeah, we're actually making, looks like all-time highs, or at least highs for over 20 years. So in a bear market like this is a computer networking stock. Something's going on here. It's acting very, very well. Earnings and sales are strong. So all in all, this looks really good. There's just no buy spot right now. And so we're just watching it. You can also see here, just to point it out, it had come down to its 50-day moving average. That's the red line, and basically got support there, bounced up. So institutions are stepping up on this stock, and you can just see here lots of strong volume days. And I'd say there's more of these skyscrapers in blue, which means that they're institutional buying days, than you are getting the ones in red. So very good, very strong looking stock. That's what a leader looks like. And I suspect that if it was a good market, this thing would be taking off, and we would have been part of that. But we're not in that environment. Okay, next one is Aspen Technology. It looks pretty much the same. We don't have we had a buy zone over here, and it finally just broke out, really acting very strong. This is a computer software enterprise stock. They develop software for, looks like engineering, plant operations, supply chain management. Again, very good looking chart, making new highs. That's what a leader looks like in a poor market. This is the chart you want to see. Next one is Palomar. They do specialty insurance. Same thing, making new highs. There really hasn't been much of a buy spot for this one. You can see here it just consolidated, finally broke above its 200-day here, made a nice move, formed a pretty short base, a little too short to do much with, and just broke out again. Another base, or a short base, broke out. I'd say really these are not so much bases as consolidations. So really, I mean, sometimes that's what stocks do. They don't really give you a place to buy them. They just kind of go up, have a little pullback, up, pullback. I mean, you could maybe buy some of these pullbacks in hindsight, but it really didn't come out of a big base either. Let's take a look at the weekly. Yeah, you can see it's been kind of an erratic trader. It's formed a cup base here, but it failed. He had a cup with handle here, but it was the handle was over 21%, which is really pretty deep. You can see here, it's just not a good looking chart, and really not anywhere to get in. But that's what happens sometimes. But we do see here pretty good sales. We have nice over 30%, 30, 50, 73, 59 versus from sales. The earnings are a little bit spotty, but we can see just from the annual earnings seems to be growing pretty well. Definitely something going on there. It's one of the few stocks just heading up, but we're just watching that one too. The next one is Cross Country Healthcare, CCRN is the ticker. This one also looks pretty good, but it's been a little erratic. Looks like maybe got a little too carried away on itself this day. It's almost formed, it's like we have almost like a little island top that's formed here, which doesn't bode well. But again, kind of just sloppy looking cup with handle. We can just see just kind of came down, shot up, it broke out, failed, came back up, failed again, got support at the 50, then just shot straight up. These are tricky ones to get into. You have to sometimes be pretty creative about how you get in, because you're not just really the typical breakouts like here from this little, even if you want to buy it, you would have been stopped out. Then you would have been kicking yourself because a couple days later it just shot back up. Trying to get in again. It's a tricky one, but it's acting very well. So we're going to watch it and look for a better place to get in that's low risk. Okay, the next, we have two more. We have Syndax Pharmaceuticals. This one broke out on Thursday, unfortunately reversed on Friday. It wasn't a complete outside day, didn't engulf the upper part and the lower part, but it closed it closed right in its low, and it was down over 7.7%. So that was in high volume too. That wasn't a great close, but this is what's been happening. You get charts that look pretty good, break out, and then they fail. And that's what we're seeing more and more, which is why we're also don't have any exposure to the market. But it's acting well. So ideally, it will start to tighten up around here near the highs and give us a breakout that doesn't fail. But again, that's the overall market. And the last one is Hearn Consulting Group. And this one, we have the RS line new high. So we have this little RS blue dot. So it's showing the RS is making a new high while the stock is still in a base. That's a very bullish sign here. So you can see here we had a nice run. It just really didn't form any bases, just kind of went up. We had a big reversal here that managed to come right back up, then failed. And now it looks like we're forming a flat base, but actually a little cup is forming in here. So this is looking really, really pretty good too. Good sales and earnings. At least we have positive sales and earnings. Company seems to be growing nicely. It is a small cap. It's just $1.4 billion market cap. Overall, really pretty good ratings. Let's look at the weekly. You can see here back in 2020, that was really a lot of just, they call this slop. Just really untradeable. You try to get into this thing and you're out. But also, why would you get into this? Because it's just making new lows. It's below all the moving averages. Let other people, deal with this stock down here. There's really no safe place to have bought this. And so these people just got all chopped up and then formed a sort of downtrending consolidation. And then we came back up and now we're forming a little flat base up here. Let's take a look at the monthly. So it's been a tricky one, this one. Really. Now, sometimes what we see, this is the monthly going back to 2004, really just hasn't been able to do much. Don't know what happened over here. Really just took a plunge and came straight back. Some bad news or something. Oh, that was 2009. Yeah, so anyway, something happened there. But what we sometimes see, and there's a great example if you look at eBay, where when it came out, it kind of slopped around for a while, and then it started to just get tighter and tighter and tighter trading. In other words, we had this breakouts that failed, erratic bases that just didn't go anywhere, and eventually it just kind of got smaller and tighter and tighter, and then eventually it formed a nice, I think it was a cup, or no, I think it might have been a double bottom, either that or a cup, and it finally formed a nice tradable pattern and then broke out and went on a very, very nice run. So this is something this could do too. We just don't know, but it's acting pretty well. I mean, for us to be in a bear market, the stock is actually pretty close to its all-time highs, and especially we're at the all-time highs going back to 2015. So looks pretty good. Well, that's really it. We don't have any portfolio positions for our long-term outperformers. This market really just killed most of the contenders, or all of the contenders, because most of those were tech stocks like Intuit, MSCI, Cadence, and they just are really not acting well at all. Let's take a look at one, MSCI. So this was a fantastic long-term outperformer, just very nice move. But then you can see we broke. Now we've come down here to this. That's the 40-month moving average. We're getting support there, but the relative strength is only 46. And just looking at weekly, we've broken this long trend. So that's typical of what's gone on with most of the stocks that were really true leaders for over a decade. So, but we're always looking for them. But in this environment, we also tend to buy those sometimes at moving averages. In a good market, we would probably be picking up some right here at this, because we can see we gotten a lot of support here. Looks like 1, 2, 3, 4, 5 months, but it's just not the time. We'd rather miss it than take a chance, because it's just they're just all failing. So your odds of you making any money are just really low. Okay, well that's it for this week, and we'll be back next week, and we'll see what the trading week will bring for us. Okay, thank you.